Let me know when I can start, Steve.
Okay. Actually, you're good to go whenever you want to start.
Thank you very much, Mr. Richardson. Hello, my name is Dr. Lawrence Cook, and I'm the CSBO here at Homewood Baltimore Community High School. And I want to thank you for taking the time out in your evening to join me for this 2021 tax levy presentation. Just a few presentation norms. One, this webinar is going to be recorded. All will be muted throughout this entire webinar series. If you have questions, you may put those questions in the Q&A, which is located at the bottom of your screen, I believe, or you may also send questions to me at lcook@hf233.org. These questions, I hope to have these questions answered in a Q&A format that will be posted at our hfhighschool.org website under our finance page. And I hope to have that up and running on Monday, December 13th. If not Monday, December 13th, Tuesday, December 14th for sure. Presentation overview for today, we're going to look at revenues and expenditures. We're going to talk about the levy, property tax relief grants, and calculating property taxes. As stated before, and it's been stated, at least 8 times since I've been in this position, as far as where our revenues come from. And the majority of our revenues, they come from our local taxing body, about 64%. And because we're not a district that has a lot of industry in the district, most of our revenue comes from residents. And so our residents, we depend on you a lot in order to support the things that we do here at Homewood Baltimore High School, to support the programming for our students so that they can be as successful as they possibly can be. EBF is the state funding that we receive from the state. Embedded in that state funding are also monies that we receive from the property tax relief grant that we could either hold on to and continue to build on our programs here at Homewood Baltimore High School. But in the past few years, we as a district have approved to abate those taxes back to our taxing body. As stated, by federal grants, they tend to be restricted grants, which means that they must be used for the purpose that the grants were written for. And then other local revenues, that has to do with booking fee, the fees that we charge for summer school, the fees that we charge for transportation, so on and so forth. Those are some other local revenues that we have here at Homewood Baltimore Community High School. As a reminder, in September of 2021, we passed a FY22 expenditure budget in the amount of almost $62 million, so $61.9 million. And the majority of that went to salaries and benefits. So $40.8 million went to salaries and benefits, $12.6 million for supplies and equipment, $5 million in capital projects, $3.2 million in out-of-state tuition, mostly due to special ed services and the things that we had to provide for certain students who needed additional support outside of Homewood Baltimore High School, and $300K for others. And others tend to be professional development, professional training, traveling, fees and dues, and things of that nature. So, tax levy. Tax levy is the amount of money that we request as a district, not necessarily the amount of money that we receive. It's the amount of money that we request as a district. And we levy in the following funds: education, operation and maintenance, working cash, municipal retirement and Social Security, and transportation. Those are the funds that we levy for. Those are the monies that we request. Those are the funds that we request money for in order to support things that we have here at HF. The key terms that I want to speak to today has to do with the Consumer Price Index, the CPI. CPI that we use in order to ask for an increase in our extension is the all urban December 31st prior year. So in this particular case, it's going to be all urban CPI December 31st, 2020, which happens to be 1.4%. The other thing that we can get if this beyond that 1.4% would be new property, and new property has to do with new construction, or if someone added additions onto their home that increased the value of their property. That's how new property is implemented or instituted with the extension that we get throughout the school year. So because we are in South Cook, we are under the umbrella of the property tax extension limitation law, the PTEL law, which restrict us to maximum of 5% that we can request as a district, or CPI, whichever one is less. Tax extension has to do with the amount of money that is billed. So as we said before, tax levy has to do with what we request. And again, what we request is not necessarily always what we will receive. And what we bill is not necessarily what we always collect. And that's what tax collection come into play. So there's pretty much three parts, and really four. So I'm gonna get into that fourth one a little bit later on in this presentation, but there are a few things that tend to go on. A little bit historical data as far as CPI is concerned. Historical data, this blue line right here represents 28 years. I apologize for that. This blue line right here represents 28 years of information or data. And as you can see, the average CPI has been around 2.2%, and we have been up and down around that 2.1%. This upcoming school year, again, the CPI is going to be 1.4% for the tax levy 2021 school year, which is below that 2.2% average.
Hey, Dr. Cook, your slides are not advancing in the presentation.
They're not advancing in the presentation?
That is correct, yeah. It's still showing the title screen. Just wanted to let you know.
Oh, that is interesting because they're advancing here. Any idea what I can do in order to advance these?
Maybe reshare your screen, maybe close it and then reshare it, but it's not showing anything beyond just the title.
Okay, I'm gonna stop. Let's try again. Let's go here. I want to share that.
There you go.
Can you see it?
Yep, now we're good.
Okay, I apologize for that. Let me just go back really quick so that you can see. And this information, again, like I said, it should be posted. Now it's not moving, Steve. There we go.
Yeah, now you're good.
So this is the screen that I spoke to as far as the breakdown of our revenues. Apologize for that as far as technology is concerned. Thank you for that, Mr. Richardson. This is what we spoke to as far as the expenditure budget that we passed in September of 2021. This is what we levy for. These are the funds that we levy in. These are some key terms of it that we're going to reference tonight throughout this presentation. And this is the historical data. So this blue line here is what I was referring to before, that the average CPI for about 28 years worth of data has been about 2.2%. This year, CPI that we're going to use as far as an increase is 1.4%, which is the all urban December 31st, 2020 CPI rate. Little bit historical that Mr. Richardson, if I can just ask you a question. So as you see this slide, do you see the entire slide, or is this bottom portion here impeding all the information that you're supposed to see? If I can ask that question. Do you see my ruler? I can't think of what it would be called. The display at the bottom that would show mute, stop video, participants, so on and so forth.
Yeah, no, it's cut off at the bottom. The last line I see is the levy year 2020, collection year 2021 that is the last line that I can see in the presentation slide.
Okay, and you can see all those numbers, like for instance, new property sales a little bit more than $3,000, $300,000.
Correct.
Okay. Again, so I just want to make sure that everyone who's been part of this presentation can see this information that I'm sharing with you today. So just a little bit of historical data for the past 5 years. Pretty much this is what was extended, what was billed out to our taxing bodies. And this is the total extension, not just the capped fund. And remember, we cap at CPI or 5%, whichever one is lower. This is total extension. So then the total extension, it included all cap funds and non-cap funds. And the non-cap funds that we have here at home with Flossmoor High School is our debt services. So our bond, not levy, but our bond funds are extended as well. So you have the $40.9 million in 2016, 2017. Change in extension was 1.76. The CPI was 0.70. That was a little bit more than 1.076 above what CPI was. Again, some of that had to do with new property. A lot of that had to do with the fact that this is our total extension and not just our capped extension. In the following year, again, this number right here is 0.07% higher than what our extension was before. We could have maxed out at 2.10%, which is minus 0.03% of what we could have asked for. In 2018, 2019, this amount of money, this is what we extended to our taxing body, which is a negative 0.275% below what we asked for the year before. Part of that has to do with the fact that we applied for and we were approved for a property tax relief grant. And that property tax relief grant asked us to abate a certain amount of money to our taxing body. So therefore, that's why you will see that we were 4.85% below our CPI of 2.10. We could have capped out at 2.10, but because of abatement we gave back to the district, we were below 4.85%. This here is an anomaly in the sense that 2.44% is a little bit higher than the 1.9% that we could have maxed out at. But this had to do with the mistake that was made by the Cook County Clerk's Office, that they didn't abate the amount of money that we wanted them to abate back to our taxing body, which was made up in levy year 2020-21. As you can see here, was 4.4% below what we extended the year before, which overall was 6.72% below what the maximum CPI could have been and what it should have been. And most residents, they saw that in their August 2021 tax bill. Just a little bit of history. As I said before, this is that fourth thing that tends to happen. So we extend a certain amount of money, and based on the information that was shared with me by our township treasurer, Dr. Rob Grocery, we tend to, on average, collect anywhere between 97 to 98% of what we extend, what we bill out. We tend to collect 97 to 98%. But what tends to happen after that, due to property tax appeal board decisions and also certificate of error applications, refunds are given back out to our taxing body. And so therefore that will reduce our collection. And in 2016, 2017, our collection was reduced to 95.14%. Again, historically, we tend to collect 97 to 98 because we refund back to our taxing body in the form of property tax appeal board decisions and certificate of errors. We saw a trend. And that trend in 2017, 2018 saw that we collected, we held on to 91.15%. But it started to go up again, and we are in and around 93% as we speak today in the 2020-2021 levy year, collection year. So again, we collect about 97, maybe 98%, but because of refunds, our collection really looks like 93% for this particular year. So just as a reminder, again, this session is going to be recorded. All are going to be muted. You may enter your questions in the Q&A slot, or you can send questions directly to me at lcook@hf233.org. I will answer questions in the Q&A format, and I hope to have those questions posted by Monday, December 13th, or Tuesday, December 14th at hfhighschool.org, listed under district info, business office, finance page. You can find it at our finance page. And if you cannot find our finance page, please send me an email and I can give you directions to how to find our finance page. All right, so 2021 property tax levy calculation. So in 2020, the total extension that was extended out before abatement was a little bit, almost $41 million. So $40.833 million. The inflation CPI, all urban December 31st, 2020, as I mentioned before, was 1.4%. If I take what we extended last year before abatement and multiply by CPI, this is the additional monies that we're asking for this upcoming school year, $571,000, almost $572,000. So the total cap fund is going to be a little bit more than $41 million. So $41,405,641. Which leads me to this. So at our November board meeting, and I believe at our November Finance Committee meeting, this is what we're going to recommend as far as the tax levy. And these are the funds that we're going to levy as far as the tax levy is concerned. And that amount is pretty close to what we shared from before, which is the 41,405. We just round up. Again, the reason why we're recommending that levy is because we passed an expenditure budget of nearly $62 million. So coming back to the slide again, just as a reminder, in this particular slide, it speaks to what we have collected from 2016 to 2021, what we held on to. Because again, on average, we tend to collect 97 to 98% of what we extend, what we bill out. But because we provide refunds due to PTAB, Property Tax Appeal Board decisions, and certificate of errors, we tend to hold on to, we tend to retain 93, 93.66, 92.42, so on and so forth. Because of that, that was a public act that was passed in August 2021, and it got some traction as far as being shared with our business manager in around September, middle of September, and we talked about it, through September and October, and then again in November, and finally we come to the conclusion. We finally have numbers as far as like what the Senate Bill 508 has to do with this public act of 102.051. Has to do it. So we actually have the actual numbers to what could be extended back to Homewood Flossmoor High School in terms of refunds. So again, the 2020 total extension was $39 million. So $39.793 million. The refunds were issued, as you saw on the slide from before, after our refunds were issued, we're at 93% of what we were able to retain. And normally we hold on to normally we collect like 97, maybe 98%. But because we give out refunds, we were able to retain about 93%. Well, this law has to do with reclaiming that levy. It's a way to try to make the district whole, because if this is the amount of money that we're asking for, this is the amount of money that we believe that we need in order to continue to support our programs here at Homewood Flossmoor High School, it is important that we receive as much of what we're asking for as possible. So eligible property tax refund that could be refunded back to the district or reclaimed back to the district are anything that was refunded back to our taxing bodies in the form of the Property Tax Appeals Board decision. So when people go and they say, well, my house, it was assessed at this value, it was assessed too high, based on the properties in my neighborhood, we believe that it should be assessed at this. And then if they win that appeal, then they are granted a refund. Or it could be done in the form of a certificate of error. And that is pretty much an exemption. So if you qualify for an exemption, but you did not file your exemption in a timely fashion, you could apply for a COE, which is a certificate of error. And if you are approved for that certificate of error, you would get a refund. This amount of money, as far as the reclaim levy, it is not part of the PTAL. It's not going to go into that capped. It's not going to go into the capped. But it is included in the grand total extension. And because it's included in the grand total extension, it is going to impact our tax rate. The district may opt to abate all or part of this particular levy. And it's a levy that's going to be automatic. That's going to come from the Cook County Clerk's Office. And right now, the number that we receive as far as the Cook County Clerk's Office, we, Homewood Flossmoor High School, is estimated that the amount of money that we can receive that was refunded back to our taxing bodies a little bit more than $1 million. $450,000 almost in PTAB, property tax relief, property tax, that should not be property tax relief board, it should be the PTAB. It should be property tax appeal board decisions, and $553,000 in certificate of error. But again, those are applications that people apply for as far as exemptions are concerned. I would make sure that I'm going to correct this. This should say PTAP. It should not say property tax relief. It should say PTAP decisions. So a little bit more than $1 million. So our total extension for 2021. Cap funds, as we saw before, is a little bit more than $41 million. Under debt services, $2.258 million. The reclaim levy, a little bit more than $1 million. So the total amount of money that we can extend this year is $44.67 million. That's the total amount of money that we can extend this upcoming year. One thing that we have done as a district for the past few years is that we have applied for and we have been approved for tax abatements. So in levy year 2018, we applied for and we were approved for a tax abatement that asked us, that called for us, that required us to abate a little bit more than $2 million back to our taxing body. And because we abated a little bit more than $2 million back to our taxing body, we received from the state a little bit more than $1.9 million in order to offset some of this cost. It wasn't 100% that we received from the state. It was close to 100%, but it wasn't 100%. I want to say it was like 97% of what we received from the state. And the state said that we were going to continue to receive a certain amount of money into perpetuity if we this one time. So in 2008, in levy year 2018, we abated this amount one time. We were going to approve a certain amount of money. We were going to receive an increase in a certain amount of money for years to come. In 2019, we applied for another property tax relief grant. And that said that we had to abate $1.8 million back to our taxing body. We received about 97% of that in our evidence-based funding. And in 2000, and in this particular property tax relief grant said that we had to do it for 2 years. And that's why you see the same number for 2 years, so the 1.839. Right. So in mandatory abatements, we have up to this point abated about $5.7 million. Optional abatement. So as I said before, because we abated this $2.3 million at one time, we only had to do it once. We received some additional monies in our evidence-based funding, and this comes from the state. We found that that amount of money that we received from the state was a little bit more than $1.3 million, so almost $1.4 million. And the Board of Education, they decided, because we received that additional money in evidence-based funding, instead of holding on to that money, that we were going to give that additional money to our taxing body. So in 2019, in levy year 2019, this is what we abated. This total amount, $3.2 million, is what we abated back to our taxing body. In 2020 tax year, well, actually in 2019, what was supposed to happen is that we were supposed to abate this amount of money. Because of some confusion that we had with the Cook County Clerk's Office, we only abated the 1.89. So in 2020, what happened in 2020, we actually abated the 1.89, we abated 1.393, and then we also abated the other 1.393 from the prior year. All in all, this is what we abated back to our taxing body. Mandatory abatement, $5.7 million. Optional abatement approved by the board, $2.78 million. And the total abatement up to this point, $8.5 million or $8.49 million. Board has a decision to make for this upcoming school year in yellow. So in levy year 2021. And we talked about this in our finance committee meeting, as well as at the November 2021 board meeting. And I believe that, and it needs to be approved, it needs to be passed at the December meeting, that we're going to, well, I was given, as the business manager, I was given approval to apply for a new property tax relief grant. And that's the 2021 property tax relief grant, or the FY22 property tax relief grant. And that's going to be an amount of $1.75 million. So we are going to receive from the state a little bit less than that, about 97% of that, $1.70 million, in order to abate back to our taxing body $1.75 million. All right. Additional monies that we receive in the other two grants is $1.882 million. And the board, they have action, or they can act on, or they can opt to abate those monies back to our taxing body, giving us a total that we can abate back to our district $3.633 million. If all of this comes to fruition, then we would have abated a total of $12.13 million, with $4.668 million of those dollars being optional abatements made by the board. So the adjusted extension could be 41 million and some change. So $41,033,942. That would be the adjusted extension when we take the total extension and we subtract out the abatements. So one final reminder, this session is being recorded. All will be muted. If you have questions, you may put them in the Q&A feature that's located at the bottom. If you can't find it, or if you don't know how to do that, you can send me questions directly at lcook@hf233.org. I plan to answer those questions in the Q&A format, and I hope to have those questions and answer posted at the hfhighschool.org website by Monday, December 13th, Tuesday, December 14th at the very latest. So key terms in calculating your property tax bill. Fair market value. So this is the value of your home based on the properties that are selling that are similar to your home that are selling in your area. An assessed value. Cook County has an assessed value for residential property at 10%. And we have an equalized assessed value, a multiplier that is determined by the Illinois Department of Revenue. And that multiplier for this year is 3.2234. See how all this is going to work in a moment when I go through an example of how you calculate your property tax bill. Common property tax exemption, homeowner's exemption. Now, homeowner's exemption means that you're the homeowner and you're also a resident of that home. So not that you're a homeowner and you're renting out that home, but you're a homeowner and also a resident. And that maxed out at $10,000. Senior exemption, you must be 65 years or older, and that maxed out at $8,000. Senior freeze, that means that you qualify for a senior exemption and your maximum income is $65,000. Minimum exemption is $2,000. Other types of property tax exemption: persons with disabilities, returning vets with disabilities, long-term homeowners, and home improvement. Long-term homeowners are homeowners, and when I did my research, I found that only about 2% of the people in our area would qualify for this or have qualified for this in the past. That means a homeowner who lived in their property for such a long time that back in the day, it wasn't assessed for very much money, but all of a sudden it's assessed for 10 and 15-fold. So therefore, they're able to get an exemption. Home improvement, as we talked about before, as far as new construction, when you do home improvement, that will increase the value of your home. You can get an exemption for home improvement up to 4 years. And the total tax rate is found by taking the total EAV, dividing it by the total tax extension. So here's an example. So if your home was worth $200,000, we're going to take that $200,000 home and we're going to multiply it by the assessed value, which is 10% for residential. So that gives us $20,000. We take the $20,000 and we multiply by our multiplier, which is 3.2234. So the assessed value is really $64,000. So for the $200,000 home, the entire $200,000 is not taxable. 64 plus is taxable. But because you also would probably qualify for a homeowner exemption because you're a homeowner and you're also a resident, subtract out the max, and the max is $10,000. That would put your assessed value at $54,468. This is the taxable amount, $54,468, not $200,000, $54,668. The tax rate before abatement, you would take that $44,666, which was shown on a previous page. You would divide that by the total EAB, multiply by 100. You see that the tax rate would be 5.6%. If you take your assessed value, multiply by the tax rate, divide by 100, you will see your tax bill for Homewood Flossmoor High School, and this is for Homewood Flossmoor High School only, $3,064. If you ever had a chance to take a look at your tax bill, you will see that not only is Homewood Flossmoor High School there, District 233, also there's District 161, there's the library, there's the village, and so on and so forth. All right, so here's what would happen if we applied our abatements. So as shown on the last slide, if the fair market value of a home is $200,000, then the tax bill without abatement is going to be $3,064. That's what we're able to calculate from this last page. If we applied FY22 property tax relief grant, which I just applied for, and I won't know if we receive that, we'll receive those fundings until probably after January, because that's the deadline for the application. There's a very good chance that we're going to get the FY22 property tax relief grant because we're number 7 on the list. We're able to abate or give back $1.751 million back to the community. That's going to be an additional savings of $120. So instead of your tax bill being $3,064, it's going to be $2,944. If we were to abate the required and optional abatement, so the FY22 along with the other 2 abatements that we had prior to, then that's going to reduce your tax bill by $250 in total. So instead of paying $3,064, you would pay $2,814, which is an additional savings of $130 over the 120, and 120 and 130 is a total amount of $250. That would be your savings if the value of your home is $200,000. I'm almost done. You got 2 more examples. If your home was worth $150,000, then your tax bill without abatements is going to be a little bit more than $2,000. If we apply FY22 abatement and only the FY22 property tax relief grant require abatement, that's going to reduce your bill by $84. So you're going to go from $2,157 to $2,073. And again, these dollars that you see only apply to Homewood Flossmoor Community High School, not your total tax bill, but for only District 233. If we did all the abatements, then it's going to reduce your amount from $2,157 to $1,982, which again is an additional savings of $91 over the 84, bringing you a total to $175 saving if the fair market value of a home is $150,000. And then finally, my final example, I put $250,000 here because I found that was kind of like the average home in Flossmoor. Without abatements, your bill is going to be almost $4,000, so $3,970. With the FY22 property tax relief grant only, it's going to reduce your bill to $3,815, which is $155 saving. If we did all the abatements, then it's going to reduce your bill from $3,970 to $3,647, which is an additional savings of $168 over the 155, which will bring you a total savings of $323. So this is going to conclude my presentation for tonight. Again, my name is Dr. Lawrence Cook, and I'm the Chief School Business Official here at Homewood Flossmoor Community High School. If you have questions for me, you may reach out to me at lcook@hf233.org, and I will try to answer your question as soon as I possibly can. Mr. Richardson, that's going to conclude my presentation for tonight. Is there anything else that I need to do at this particular time?
No, you're good, Dr. Cook. I've got all the questions captured, so we are good to go to end this presentation.
Okay, thank you, and thank you. Good night, and thank you for attending this presentation.